All right, let us know when you want to get started, Shamika.
Okay, sorry about that. We can go ahead and get started. Did you want me? I'll stay on probably for 15 minutes to let more people in, and then I'll let you guys do the presentation, and then I'll switch you back over to host, okay?
Okay, wonderful. Sounds good.
All right.
So yeah, go right ahead, and if you want to get the introduction going, since it's your group, go right ahead.
So we just want to welcome Amanda and Josh with Plex Capital. Today, they're going to be talking about risk management in the healthcare staffing space. So if you have any questions, if you can't take yourself off mute, feel free to drop them in the comments, and then they'll have their contact information if you're watching this as the recording.
Wonderful. Thank you so much, Shamika.
I'll share my screen if you can give me the ability to screen share.
So Shamika, are you able to do that?
So you're the host, so you would have to do that, or you have to take yourself off of host.
Okay. So my apologies, but I'm new to this. Let me see. Oh, there it is. There is someone else there. And then how would I go about that? Sorry about that.
If you go to the participants and click on my name. Oh, okay. I got it. Don't worry about it.
Okay, perfect. There it
is. Okay. Josh, you should be able to share now. Welcome, everybody. Feel free to drop your information in the chat box below.
Thank you, Shamika.
Andy, can you see the presentation now?
I can, yes. Thank you.
Okay, well, I'll go ahead and get started. Welcome, everyone, and thank you for joining us here. Appreciate the Shamika and the rest of the NOSA group allowing us to host this brief webinar. Given a couple of these on risk management in the past, and it's always good to provide an update with some updated data and some of the other things that we are seeing in the market right now. So we'll go ahead and get started. Brief intro. My name is Josh Good. I'm the Chief Operating Officer for Plex Capital. We are a payroll funding company based in Kansas City. Work with several of the NOSA members, and our specialty is specifically in the healthcare staffing industry. So go through just a few updates for everyone here, and just look at the kind of the status of the industry. You'll see from this chart, overall occupancy rates of skilled nursing facilities are improving. At the end of 2022, they're up to 79.6%, which is still a gradual increase, but it's still not fully recovered from pre-pandemic levels, which were around 86%. And the reason this is important or a relevant statistic, if you look at a skilled nursing facility, the financials are very similar. Think of it as like a hotel. There are certain fixed costs that a facility has, be it their rent, their own payroll, utilities, et cetera. So they have to maintain a certain occupancy rate to be able to meet those fixed costs. And then anything over and above that is when a facility becomes, quote, profitable. So at a 79.6% occupancy rate, those facilities still are not profitable, but it is improving. The low occupancy rates are really driven more so by the facility's inability to staff to meet the demand versus the lack of demand. So basically what the administrators and owners of these facilities are saying is that if we had all the staff here, we could increase our occupancy rate, but because we can't find staff, we can't accept referrals or patients. And so that's important. The occupancy is not low because there's no demand. The demand is there. There's just no capacity right now because of the current staffing needs, which is good for people on this call. Last year, there were 129 skilled nursing facilities that closed, went out of business. That's based on CMS data, which is, there's a lag. And so the actual number of that is probably significantly higher. And it's just a math thing. A facility, the owner is only going to run at a loss for so long before they close their business. And we certainly saw a decent amount of that in 2022. And we feel that'll continue in 2023. There's been a lot of change of management companies and ownership as these companies try to find ways to become profitable. Essentially, the Medicaid reimbursement rates for a lot of these facilities is below what it's actually costing them to operate because of the higher labor costs that they have and because of the low occupancy rates. There's about 15,000 of the skilled nursing facilities per CMS, and 71% of those are for profit. And so one of the other trends that we're seeing in the industry is a move from historically, the majority of skilled nursing facilities were either nonprofit or government owned, church owned, that sort of thing. But there's been a steady movement to where more and more of them are actually owned by for-profit companies. You know, there can be good and bad with that, but generally speaking, if you think of a nonprofit or government owned, their primary objective is specifically to care for their patients. Generally speaking, if you're a for-profit company, your primary responsibility is to your shareholders, and sometimes focusing on them can be at conflict with the quality of care. And then most importantly, the average days to pay by skilled nursing facilities have really slowed down. Based on our data, and we work with a significant portion of skilled nursing facilities across the United States, we've seen overall slowing of about 6 days on average from February of 23 versus February of 22. So what that's about a 20% decrease. And the reason facilities do that is it's the cheapest way for them to hold on to money is just to slow down facilities. So some of these slides I've used before, but it's always good for a refresher. Just talking about business credit in general, it's significantly different when you analyze a company to look to extend credit versus what you would do if, as an individual, you were to walk in and get a car loan, credit card, mortgage, that sort of thing. There's no magical scores as it relates to a business or a business credit score. There are services that you can use, like Dun & Bradstreet, Credit Safe, or a few examples. They get their data from companies like Plex Capital. We provide these companies data on how quickly companies are paying us, and then they turn around and resell that. Unlike individual or personal credit reports, where everyone's entitled to a free one every year, business credit reports are much more expensive in general. And usually, if you're just trying to get a one-off, it's usually not cost effective. So they're really geared towards companies that need to review several businesses at a time. Always good to remember, as a staffing agency, you're providing credit to these facilities on an unsecured basis. There's no collateral when you send staff there, unless you're getting paid in advance. You know, the amount of time between when you staff and when you get paid, that is essentially an unsecured line of credit that you're giving to that facility. If they don't pay, you can sue them, but there's no collateral per se that you can go and pick up. It's always important to know who you're actually contracting with when you're contracting with the facility. You know, is the actual facility? Is it the management company? Is there a VMS involved? If there is a VMS involved, who's responsible for payment? And then just remember, personal credit is very much a science. You know, I could say a credit score, and you could, generally speaking, look at that and say, okay, that's either someone that pays their bills or not. Business credit is much more of an art form. So we talk a little bit about why it matters, or what matters as it relates to business credit. First one is payment history. Does that company have a history of paying you on time? That's a really good indicator. If they're not paying you on time now, you know, it's probably not someone you would want to extend additional credit to. How long have they been in business for? And we'll touch on that on the next slide. Make sure when you look at that, you're talking about the entity that you're contracting with, not necessarily how long the building has been there. Does this facility have a management company? Are they reputable? Do they manage other facilities? What's their occupancy rate? We touched on that earlier. The higher the occupancy rate, the more likely that facility is cash flow positive and can pay you timely. What is their CMS rating? Look, if a facility is not doing a good job of taking care of their patients, they're very likely they may not be good at paying you on time either. And then just pay attention to who you're contracting with and what their relationship is with the actual facility. So this is a new slide I put together just to kind of illustrate some of the challenges when it relates to evaluating the business credit, or actually knowing who you're dealing with. And a little disclaimer, I don't know anything about this skilled nursing facility. They just happen to be down the street. So I pulled them up, saw that they were for profit, and I said, well, let me see if this is a good example. So the case study we have here is a facility called Gardner Health and Rehab Center. They're at 223 Bedford Street in Gardner, Kansas. And so if you were to look at the CMS data, it says that this facility was approved to provide Medicare services on April 1st, 1993. Well, usually a very good indicator of someone's ability to pay you is how long have they been in business for? Are they established? And so if you were just looking at this with that CMS data, you would say, okay, this company's been in business for nearly 30 years. Clearly, they know what they're doing. If they weren't paying anyone in time, they wouldn't be there for 30 years. So full steam ahead. How much credit do you need? I'll send my nurses there this afternoon. This is the challenge that credit folk face when they're looking at these skilled nursing facilities. So if you start to peel back some of the layers, you can say, okay, the CMS data also shows the actual entity that owns that facility, or really owns the approval to provide services, is an entity in Kansas called Gardner Health and Rehabilitation Center. And so I pasted right under this. This is the data from the Kansas Secretary of State website. So if you look at it, so okay, the mailing address is for Moshi at 2420 Knapp Street in Brooklyn, New York. Okay. This is a Kansas limited liability company. Date of formation, December 28th of 2021. So what that tells you right off the bat, you're not contracting with a company that's been there for 30 years. The building may have been there for 30 years, but the company that actually owns the ability to provide services has actually been in business for a little over a year. So you're dealing with something, it's not a 30-year-old company. So let's dig a little bit deeper. Okay, let's look to see what's at 2420 Knapp Street. So this is just a Google bird's eye view. So I've got this building here. This is 2420. Looks like there's a little sign in the door, maybe a wet floor sign there. Nothing on the building. And so this brick building that you see here is the address of the entity that actually owns this facility down in Gardner, Kansas. And so you do a little bit more digging on this individual. He is somehow connected to an entity called Recover Care, which it looks like they own several different nursing facilities. The other thing to look at is who actually owns the building. And so this is just some property tax records for this address in Gardner, Kansas. Looks like it's owned by Ganon Realty. If you do some research on Ganon Realty, you would find that this individual here, Moshi, is also connected as the primary contact for the Ganon Realty. So essentially what you've got in this tangled mess is you've got a company that's been in business for a year, based out of Brooklyn, New York, that has the license to provide skilled nursing services at a facility in Gardner where the building has been there for 30 years, but is owned by another entity that has similar ownership to the licensed facility. And then my assumption is there's probably also a management company involved somewhere on here. Most likely, when you enter into a staffing contract, your staffing contract is going to be with Gardner Health and Rehab Center, LLC. And so that is the entity. If something goes wrong, that's who you're going to be able to go after. A business that's been around for about 11 months, 12 months, doesn't own the building. And so you have to look beyond just, you have to look beyond how long that building has been there. Again, I don't know anything about Gardner Health and Rehab. They pay, they don't pay. This is just a very common example that we see in the industry, this tangled web of ownership. And there are some efforts at the national level to try to get more transparency as, hey, who in the world owns these things, these places, these facilities that are taking care of our seniors. But as it stands now, you have to do a lot of digging.
So Josh, real quick, I'm going to ask a few questions here as they're coming through, but one of the questions would be that it's not as easy as people think to really just consume all the data that is out there on facilities, because we all have heard how things have changed from during COVID times to today's time. And so people get sometimes a little bit desperate for contracts, right? And especially in your facilities. I guess that the message here is it's not as simple as you think. And that's where the value of companies like a good factoring company that specializes in the industry, that's where it comes in, and how critical it is to know that they are evaluating everything. They're familiar with this web of entities that can lead them into bankrupt if they're not careful, if they don't understand exactly what they're looking at. Because pulling up a credit and looking at a beacon score, that's always easy, but like getting into who all is involved and truly like the true entity that the agency is working with, that is key.
Yeah, the issue is if you're not working with a company that understands some of the complexities of this industry, it would be very easy for some type of a finance company or someone that's just not familiar to just run a credit report on Gardner Health and Rehab Center. And that credit report might give you history going back for 20 or 30 years because someone probably did extend credit to Gardner Health and Rehab under that name, and maybe they were paid on time. But you really need to throw out, the first 29 years of history that credit report would show, because all of that quality payment data has nothing to do with the company that actually owns it right now. You really just want to look back in the last 11 months and what has happened there. And that's something that, again, is a little unique to this specific segment of the healthcare industry. so we get a lot of questions about, okay, well, what do we do when people don't pay us? And I think my challenge always we work with a lot of startups. Our challenge is always the best way to give yourself some standing when someone doesn't pay is in your staffing contract, and having that professionally looked at by an attorney that's licensed in your state versus something you just grabbed off of the internet is going to be one of the best ways for you to protect yourselves as it relates to if you don't get paid. So your staffing agreement is going to determine how much you get paid, when you get paid, how you get paid, and what's your recourse if you don't get paid. It is the single best investment. So some of the common provisions, I'm not an attorney, but I have seen contracts, of various quality levels. So some of the common provisions that we have seen in contracts that are always very, very helpful to staffing agencies. If you're submitting invoices, give them a timeline to approve the invoice, specifically helpful if you're using some type of funding company that needs to do some type of verification. Put a provision in there. Hey, if we send you time cards on a Monday, you have payroll to meet on Thursday or Friday. Put a provision in that contract and discuss this with them in advance. Say, we'll send you the time cards on a Monday. I need you to be able to review them. Let me know if you're disputing any of them by Tuesday or Wednesday. And you've got a good argument for that because you say, look, I got to pay my people. So if there's something wrong, I want to know before I actually run my payroll. Another good provision to have is in the event of a dispute. So they're saying such and such didn't work those hours or wasn't there that day or forgot to clock out for lunch or something along those lines. You always want to have a provision in your contract that the undisputed portion of that invoice or of that shift will get paid. In business, some money is always better than all the money. Some money is better than no money. You can always work to resolve the disputed portion, but you don't want to trip over dollars to get to quarters. If you have a $10,000 invoice and the facility says, well, we're disputing $1,000 of that, okay, that's fine. Have them pay you the $9,000. Don't give up your rights. Don't accept that as settlement. But say, okay, well, pay us the $9,000 because everyone agrees that you owe that. Now let's discuss the other $1,000. It at least gets some commitment back from the facility to do that. But you really want to have a provision like that in your contract. You want to have some type of provision in the event of assignment. A lot of times with all of the consolidation, the management changes, we've seen that, we're under new management, you need to call them. The old management has nothing to do with things anymore. Those are challenges that we see quite often. And you can protect yourself in your contract. Say, look, if this facility is sold or management changes, everything is due and payable at that date. You cannot transfer our debt to someone else without our approval. Make sure you actually have payment terms on your contracts. 30 days is kind of standard. The longer your payment terms, the greater the amount of credit and risk that you're extending to that facility. You can also ask for electronic payments. Those don't get lost in the mail or caught up in snowstorms. You should have provisions covering late fees, collection fees, attorney fees, jurisdiction, where if you're in the state of Kansas and you're staffing a facility in Minnesota and they don't pay and you need to sue them, where are you going to sue them? Well, if you're in Kansas, ideally, you'd want to sue them in Kansas. It makes it far more cumbersome for them and much more convenient for you. But you have to have those terms in your contract. And then, just take caution whenever you're renegotiating rates. I know a lot of times it's a fast-paced industry. Administrator calls, said, hey, can you send such and such for, this amount per hour, or we'll pay you an extra bonus if you can send people in this weekend and it's all last minute. Be very, very careful when you're renegotiating those types of rates over a text or an email. get a new contract. A DocuSign subscription is not expensive, or some other type of service. Say, look, I'll send them in at that price, but you're going to sign a contract, and I can get that to you in the next 10 minutes. That way there's just no question. Administrators turn over, new administrator comes in, they're going to look at your old contract, say, why are we paying this higher rate? This is what you agreed to. And now you're at the mercy of a text message you got from someone that doesn't work there anymore. Not to say it wouldn't stand up, but you got a lot more legs to stand on if you actually have a signed contract.
Josh, on that point, and that's a really good point, because we saw that quite a bit during COVID times, where some of our clients were sending staff without getting an updated agreement. But also, one of the things that we realized as we were experiencing different situations was that some of those administrators might have not had the authority, especially with larger organizations, where even though the administrator had signed, there was still like some invoices being disputed at the rate that the administrator agreed on. And I think we saw that more with like larger organizations, correct? So like it's equally important to get it signed, but also get it signed by the right individual.
Yeah, and that's why we would always recommend that if there's any change in rates, that's handled via a contract, because we did two of the largest kind of litigation that we are currently involved with as a company relate to contract was signed by the facility. That contract was directed to maybe an in-house attorney, or someone at the corporate office who signed it, and then administrators in a pinch on a weekend or on a Friday or coming into a holiday agrees to pay an extra X amount per hour to get staff in there. Administrator quits on the following Monday, and then that corporate office is now coming down to say, well, administrator didn't have the authority to agree to those higher rates. Those can only be done by someone at our corporate office. And so now you have an argument, and it's something that has to get settled out through a litigation process, versus had the contract just been sent, well, then either the administrator would have signed the contract, which, okay, that gives you a little more legs to stand on, or they would have maybe pumped the brakes and said, okay, I got to get this to our corporate office, and maybe the proper approvals would have been taken care of. And so again, fast-paced industry, a lot of times staffing needs are last minute. Get the contract signed and avoid a lot of heartburn down the road. We speak from experience on that. Another tip that I can give everyone is understand the payment process. From what we've seen, and we collect payments from facilities all over the country. We have staffing agencies that we staff all over the country. The number one reason that we see payments get delayed before we receive them it's operational or procedural issues versus financial issues. Financial issues do exist, but more often than not, invoices have been going to the wrong person, or didn't have the right sign off, or the right version of a timesheet wasn't used, something along those lines, that by the time you find out, because at 30 days, you're saying, hey, it's where's the payment? They're like, well, we don't have your invoice. Who are you sending it to? You've been sending it to the DON, who doesn't then turn around and forward it to the business office or accounting. And now suddenly you've got a delay in starting it all over. So some of the questions, again, when you're first starting out with a facility, just start asking questions. Hey, who approves the timesheets? Do they need to be approved? Are we using our timesheets? Are we using your timesheets? Are we comparing the two? And if so, who's doing that comparison, and what timeline do we have to get that done? I understand from the facility standpoint, their review of those timesheets is in order for them to pay the invoice, which may happen 30 days later. Your motivation to get them to review that timesheet is so you can confidently pay your staff maybe in 2 or 3 days from now. And so those are things you have to get worked out on the front end and not be scrambling and trying to work through disputes after you've already paid your staff. So find out who all needs to approve this before the payment comes. And then where's the payment coming from? In that convoluted example earlier, is the payment coming from Gardner Health and Rehab? Is it coming from this Recover Care, who is maybe the ownership group? Is it coming from maybe another management company that they're using? Is it coming from probably not the company that owns the real estate? Who knows? Where is the money actually coming from? And then make sure that who you're talking to say, okay, who has the authority to make the payment decisions? You get this a lot. You talk to someone in accounting and they'll say, well, we're just waiting on the approval. Okay, well, who's approving it? And you kind of work your way up. But the more you can understand that process before you start sending staff in there, as it says on the slide here, maybe save yourself some Advil. If you're dealing with a facility that won't tell you who's responsible for payments, in our experience, that's always a red flag. I mean, is that really something you need to hide behind? Again, you're giving them unsecured credit. You have a right to know who's actually going to be responsible for paying at the end.
Well, and I'm going to interrupt there, Josh. One of the things that I always remind, I get to speak with a lot of entrepreneurs, but is understanding that, yes, you want that contract, but you should not compromise any of these processes. This is coming from over combined of 30 years of experience, what we're sharing here with this group. And so do not get worried about losing a contract because you're asking all these questions. You got to remember that you're not only staffing, but you're also really financing that facility. And so because you will be financing it either through Plex Capital or your own funds that you may have, your retirement account or whatever the case might be, you have the right to know exactly who you're lending money to and who you're servicing, because believe me, everyone encounters issues throughout the relationships with facilities, and the more prepared you are, the better you're going to be. And so I just wanted to throw that out there because we've seen it. Josh and I have over 30 years of combined experience in this industry. And so we've seen a little bit of everything, and we've dealt with thousands of businesses. So all this information it can be long, and it can, for some of those, especially me, I'm in business development, so I'm not necessarily on the day-to-day operations and risk management like Josh, but it can be lengthy and it can be somewhat not, too exciting, but it is such a critical thing to understand as a business owner. So I just wanted to throw that out there. Please, Josh, go right ahead and continue.
So this is a new slide that I put together, just some of the excuses as a company that part of what we do is collecting on past due invoices. So I'm sure if anyone's been in the industry or that's had to ever make a collection call for any reason has probably heard these before. The most common one, we mailed the check 2 weeks ago. It hasn't arrived, but give it another 2 weeks to see if it arrives. Look, there are delays in mail, but you can mail something anywhere in the world in 30 days. And so that's usually that's an excuse because either they haven't actually mailed the check yet, or they discovered that it's still sitting on their desk. So maybe they'll drop it in the mail that day. We had a facility a few weeks ago that said, we mailed a check on January the 15th. And then once we actually got the payment in the mail, which is about the middle of February, the check was dated January 15th, but the postmark on the envelope was February 11th. So it took 3 days for the mail to get it here, but it took them over 3 weeks to actually get the check that they had printed into an envelope and into the mail. And that's just that's just an excuse and a method of delaying. Number two, we're just waiting on approval to pay. Usually what that really means, they're just waiting for them to have enough money to actually write a check. A good rebuttal on that is, okay, well, who needs to approve it? Because that's who you need to be talking to. We've heard this before. We have an inspection going on in the office. Jokingly, I say, well, they're probably just waiting to see how big their fine is to see if they're going to have enough money to pay your invoice. Look, we all get distractions on a daily basis, and the facility is no exception. But having an inspector in your office should never be an excuse for the inability to cut a check. That takes a minute to do. Change management companies, you need to call the new one. That could potentially be kind of a panic time. Sometimes what you'll see is there's a crossover date. You should have been notified well in advance. Your contract should have terms stating that if there's a change or some type of assignment, you get notified in advance. And a lot of companies do. We see those all the time. But usually you'll have some type of changeover date stating that any staff prior to a certain date, you collect from this company. Anything after this date, you collect from that company. That's usually a time for you to start scrambling and making sure whoever the old company is gets you those payments as soon as possible. So you really want to dive in and say, okay, are there any disputes on those invoices? Who is it that we need to talk to? 99% of the time, in my experience, that's going to cause some significant delays when that happens. And then make sure if it has been assigned to a new company, get your contract signed by that new company. Make sure everyone's on the same page. Don't rely on your old contract. Again, it doesn't take too much time. Just draw up a new contract with the new entity or the new management company, whoever it is that's going to be paying you, and get them to sign it. Don't rely on your old one. Your clock in or clock out times are wrong. Again, try to have some expectations with your customers of how quickly those get reviewed. Again, so you can confidently pay your people. Your rates are wrong. Again, have it in your contract. Make sure everyone understands. You sent unlicensed or non-certified staff. This is one that we've seen come up, over the last 30 days. I know a lot of states, particularly during, kind of COVID times, there were various waivers and whatnot that you could have for staff to send in. Maybe for a CNA, they didn't have to have a certain certification if there was a waiver. I'm not an expert on those things, but we have seen some instances where facilities, they go and maybe that waiver period has lapsed. They'll go and ask for licenses or certifications from staff. And if they don't have it, you probably have provided some reps and warranties in your staffing agreement that the people that you send there are, have the required licenses or certifications to actually be there. So that can cause some serious problems when it comes time to pay. And so if you're providing staff under some type of waiver provision, make sure that waiver is still in force. Do your research on that before you send staff in. A lot of the waiver provisions that are out there only applied for that facility for people that they were hiring, not necessarily temporary staff that was being placed into their facility. So we have some instances of that going on right now that we are currently dealing with. So, be aware. One of the last slides on here, how to collect on past due invoices. So we'll kind of go through, dispute prevention is always the number one way. Again, operational procedural issues, the number one reason invoices don't get paid. Get those cleared and out of the way early. That's good dispute prevention. You want to submit an invoice where there's no question on the times that have been submitted. There's no question as to the rate that you're being charged. There's no question as to your staff have the proper licenses and certifications and background checks, whatever they need to have. All that's in place. So there's no reason procedurally or operationally for that company to not pay you. We always approach past due invoices with a kill them with kindness approach right off the bat. Again, these are human beings that you're talking to. These are businesses. And a lot of times the first person that you talk to, if you're making a collection call, is not the person that owns the bank account that's making the payments. So sometimes you got to make friends with the right people, whether it be the business office or the accounting person. Because odds are, if they're slow paying you, they're probably slow paying a lot of other vendors as well. So find a way to put yourself over and above the other people and see if you can get higher in the pecking order. But you have to be a squeaky wheel. You can't just, you don't have to be rude every time you call them, but that doesn't mean you should stop calling them, right? They need to be aware that you are not going to go away until your invoices are paid. If someone's not paying you, don't continue to staff there unless you have a really legitimate reason and a clear understanding of why they haven't been paid and now when you're going to. Get your staff out of there. You're just digging yourself a bigger hole. That's probably the most leverage that you as an agency has, particularly if that facility is desperate for staff. That's your main leverage. You know, I can't keep sending my people there if you don't pay me. You know, how am I supposed to pay my staff if you're not paying me? Make a site visit, find out who has the authority to make sure. Most staffing agencies are staffing in the area that they're located in. And so, you know, if you're staffing a facility on the other side of town and they haven't paid and they're not answering the call, drive over there. It's a lot harder for someone to ignore you if you're standing there versus if it's just a phone call coming in. I'm not saying you got to go in, you know, aggressive or, you know, certainly don't threaten violence or anything like that. Just walk in. We're all professionals. Say, hey, let's sit down and talk. What's going on here? Help me understand why I'm not getting paid. Beyond that, you can send a demand letter. Usually that's going to at least make it to, you know, their ownership group, or if they have an internal counsel, usually a demand letter is kind of the next level of escalation. And then, you know, turn up the pressure, you know, have an attorney send a demand letter. You know, if there's various types of, you know, reviews out there that you can do. And these are serious situations, particularly if you're being ignored. Find out who owns the place, look them up, reach out to them. There are various, it's usually pretty easy to find contact information on people now. And, you know, maybe escalate it. Maybe the person that's in charge doesn't realize the severity of the situation. You have to escalate it up. And then kind of the final alternative that you always have is you can't sue them. Look, if you have a contract and there's no bona fide dispute, yeah, you know, sue them. But I always say that's a last resort. Usually the attorneys are the only ones that win in litigation. Usually, even if you do get a judgment against the facility, a judgment doesn't mean they suddenly have the ability to pay. If they don't have the money before you sue them, they probably still don't have the money afterwards. And so you have to keep that in mind. But a quality staffing agreement will greatly increase your chances of a quick resolution. The other thing to know about litigation is so many of these court systems are very, very behind in their case logs. You know, we have cases that we initiated in 2020 that are just now reaching, you know, court dates and resolutions. And so, you know, you can be 1 to 2 years out. And so if you're getting to the point where litigation is your only option, you need to make sure that, you know, I would not rely on collecting of those monies to continue your business. If it happens, that's great, but you know, a lot of times that's probably a write-off for you, at least in the short term. And then just some other considerations. You know, have a good understanding what happens if the facility gets bought out, who's going to be paying me, what jurisdiction should I choose in my contract for litigation. We used the example earlier. If you're a staffing agency in Kansas, you're staffing in Minnesota, what jurisdiction should I use? Another thing to consider is maybe you use a payroll funding company that's based in Kansas, but you're in Florida and you're staffing in Minnesota. You know, maybe you add that to your staffing contract that, hey, we can choose jurisdiction in Florida or Kansas. A lot of times it's your payroll funding company that's going to need to take the lead on any type of litigation, especially if they've advanced you on invoices. Credit insurance for those larger agencies out there, that's certainly available. It's not cheap, and there certainly are some limitations to that, but it is something to consider. It's called AR trade insurance. Diversify your risk of non-payment. It's very difficult to do when you're first starting out. Typically what we see most startup agencies, they get into one facility, That's where 100% of their staff currently goes. And then maybe there's another facility under the same management company or ownership group that now needs staff. And then you repeat that process 3 or 4 times. And so while you may be sending your staff into 4 or 5 different facilities, it may be the exact same ownership group of all of them. So you haven't necessarily diversified yourself when you do that. And so a good agency, as you mature, is going to be able to have staff in several different facilities that are unrelated to each other. That way, if there's some type of financial problem at one, it's not affecting every single receivable that you have outstanding. We talked about it earlier. Work with knowledgeable partners. If you're going to work with your attorneys, or to draw up your staffing contract, or a funding company that's going to advance you on receivables, or really any type of partner, whether it's your payroll provider, a bookkeeper, whoever, make sure that they're knowledgeable of the industry that you're actually in, because there are some very specific and unique details about healthcare, and particularly skilled nursing, that if you don't know what you're doing, you might be paying for someone that's maybe not really helping you as well as you think they would be. And then the last one is my advice, just for all business owners, is always be monitoring. It's your business. You may have partners that are helping you out, whether it be financing partners, or attorneys, or employees, people in your office that are working. As the owner, you can never just take your eye off of your receivables. It doesn't take much time every day to pull up your current aging report to see who's paid you, who hasn't paid you, and if you need to take action. As a business owner, I use the ostrich here. If you put your head in the sand, it does not make the problem go away. And as a business owner, you will always encounter problems, right? I'm a business owner. Man is my business partner. We encounter problems as a funding company. As a staffing agency owner, you will encounter problems as well, but you can't hide from them. Just tackle them, okay? And if you made a mistake, that happens. Just figure out what happened, what resolution can get, and then just make sure that type of mistake doesn't happen again. But you never want to take your eye off of cash, and those receivables that are outstanding, your invoices, that's your cash that you're just waiting on. And if you just wait around, or maybe you hired someone to follow up on them, that's all fine and dandy. But you still should take an active role of at least reviewing them to see if that cash flow is coming in or it isn't. We talk to a lot of agencies these days that approach us, and they've got invoices that are 100, 200, 300 days old, and they have no idea why they haven't been paid on them. And that's just that's your cash flow, that's your revenue. So you don't want to bury your head in the sand.
That is great. Josh, thank you so much for all this information. It's so powerful. Firsthand, I speak with a lot of entrepreneurs, and lately I will say that I've gotten a lot of phone calls from other agencies that are working with factoring companies or funding companies that are not necessarily specializing in healthcare staffing. And, to that line, invoices sitting at 200 a days, 250, 150. And so, if you're working with someone that is knowledgeable in the industry, that they're not going to get you to that point. They're going to be working with you. But always remember that it takes two, right? So you can have the best factoring company, the best funding company that specializes in your industry. But if things internally within your organization are not being handled properly, then that's going to lead to issues. So I will tell you, as I get those phone calls from those other companies or agencies that are looking at switching from their existing funding company to Plex Capital, I let them know right away if I think they're going to be a good fit for us or not, because bringing on board another account where the client is not organized or doesn't know how to manage his business or her business, I don't want to inherit that problem. And I will be the first one to stop the conversation and say we're not a good fit. So, it just takes a lot of collaboration between the facility, you, the agency, your funding company, and any other vendors that you're using. Along those lines, when you are selecting an attorney, either to write up your agreement, your agency agreement, or if you do need to use an attorney to collect money owed to your agency, make sure that those attorneys are familiar with your business, with your industry. So you're just not kind of, hiring just an attorney because they're cheap, or because you just went to Google and found an attorney. You gotta be able to identify if they have the skill set and the knowledge base specifically in your industry. So, a lot of things to consider. Owning a business is not simple. And Josh and I, we've had the opportunity to grow a pretty large organization for the first 12 years in our factoring career, and then decided to jump on board and do, to open up Plex Capital. And it's been such a blessing. But nonetheless, every single day we're experiencing new challenges, either through the lenses of our clients, our agencies that we're working with, or even internally as a company. So don't feel like you're here alone, or like this is too scary. Just be smart. You just understand that if you're going to go into business, you cannot afford to just, look the other way and be sloppy with your organization, because it will lead you to problems. But Josh, thank you so much for all of this. Now we're going to open it up to anyone that has questions. If anyone has questions, please let us know. If not, I do have a couple questions that were sent to me in writing through the chat. But any of you that are attending, do you have any questions for either myself or Josh? Don't be shy, okay?
Taking it
All right.
easy.
Yeah, taking it easy. All right. So a few things. So there were a couple questions, Josh. Let's see. Let me see if I can find them. So with everything that you just presented, what is the best way to manage your clients during this time? What would you suggest?
So if we're talking about the best way for a staffing agency to manage their customers, I think for existing customers, it's look at your receivables that you have outstanding, and if they are not paying them within the terms that you've set forth in your contract, I think, and that's causing you a problem. And I think we need to distinguish between, if you have net 30 terms and they're paying you in 33 days, and it's not that big of a deal for your company, am I going to, step in and try to resolve that? Probably not. But if you've got net 30 terms and they're paying you in 60 or 75, and you're having to call and chase them constantly, and it's causing an issue to the cash flow of your business, I think what you would want to do is, reach back out to whoever your contact is there. Usually it's, an administrator or a business office manager, and say, hey, let's have a meeting. Let's sit down. Are you happy with the staff that I'm providing to you there? If the answer is yes, I say, okay, well, what do we need to do to get these invoices paid in 30 days? Where is this delay coming from? Is this a cash flow problem? What is the issue there? And you can take the approach of, what can we be doing differently as an agency to speed up the process? Because it might be something simple. They might say, well, it takes us 2 or 3 days to reconcile this timesheet because of whatever. Maybe that's something that's easy to fix, and you can take a look at it. But you want to try to take the approach of, hey, what can we do differently to get, or is there anything that we can be doing differently to make sure that our invoices get paid within the terms that are in our contract? That facility may come back and say, you know what, we just pay everyone in 45 days. We don't have an option for 30 days. And maybe that's acceptable to you. As it relates to, if you have customers that are severely past due and you're just not getting payments on them and all that, you really have to ask yourself, is that someone you want to continue to do business with? Or are you better off just cutting your losses, getting your staff out of there if they're still in there, and then going and finding an attorney and say, look, you go try to collect money out of it. A lot of times you can be out of sight, out of mind. They may know they have invoices to pay you on, but if you're not following up with them, the squeaky wheel is going to get the grease on there. So really take a hard look at who you're working with and see, is it actually worth your time? You have enough margin built in for the, I guess, the hassle factor that's present in every customer. For new clients or new facilities that you're working with, just understand that process and make sure you set clear expectations up front. Just as that facility has certain expectations of the staff that you send in there, and if you don't meet those expectations, they're probably not going to keep you around. You should have a similar expectation of the facility. This is a business to business agreement. You should have a similar expectation of that facility. That if I have complied with my end of the contract, my expectation is you, facility, will comply with your end of the contract as well, which is to pay me on time. And if they don't, then it really comes down to, okay, well, what is that hassle factor? What's that worth to you as a business? Is that worth chasing them and calling them 30 times for every single invoice? Better be some pretty good margin that you have on that invoice. But if you're barely making margin and you're having to hustle and hassle and all that, again, probably something to take a hard look at to see if that's a relationship that you would want to have continue or not.
Wonderful. Well, and if I may add, it's all about relationships in every business that you're in, regardless of what the business is. It's all about relationships. So once you do get that contract, just make sure that you are watering the plant, constantly being in communication with them, letting them know where they stand with you, and you finding out where you stand with them. And so communication, building that relationship is huge. Even just dropping off some donuts or, little things like that, they're going to go a long way for all of you. And one last question, Josh, that we have here before we end, really quick, there was a question here that one of the members posted. Is this a good time to grow a business? What are your thoughts on that?
Yeah, so I can talk from the industry standpoint. I mean, if we're talking specifically about staffing businesses in the healthcare industry, yeah, absolutely. The conditions out there are such that there's still a labor shortage. That hasn't changed. The only thing that may have changed the amount of demand from staffing agencies is facilities simply saying that, hey, we haven't found a good agency that we can consistently rely on at a price that we can make work. And so we're just not utilizing agencies anymore. It's not like it was a couple of years ago where you've got these massive margins because of crisis rates and stuff like that. No, there's definitely been some normalization. And that's to be expected. But I think anytime in any industry, if you're a good operator and you come in and you approach a facility in a professional manner and you provide them with some value, this is why you should work with me and let me provide my staff in there. Whatever that value proposition is, one, you need to have one. You have to be good at building relationships. And this is just kind of business 101. There's no reason you can't start a staffing agency right now or grow your existing staffing agency. It may be more difficult to find facilities right now that need staff. But, hey, that's just part of it. But you need to make sure it takes more than just calling and saying, hey, I've got a CNA, do you need them, kind of thing. Go out and find creative ways, do some research on how you can build relationships and get in contact, because that's what these larger companies are doing. Get in contact with the decision makers. Okay, hey, how can I get on your call list when you need help? Get out and form those relationships. And sometimes that's getting out. That's more than just cold calls. Sometimes you got to get out. Maybe there's networking events. Maybe there's other people that you can get in contact. LinkedIn's a great resource to find out who's friends with people and go and see if you're friends with any of them, that they can maybe give you an introduction. But Good operators in any industry will always have the ability to successfully grow their business, but it starts with being a good operator. You have to understand, control your expenses, price your services in a way that you actually are making a profit, and present yourself and have a professional approach. And sure, you can be successful.
Wonderful. Well, this was very informative for our NOSA community. If you have any questions or anything like that that you want to ask, feel free to reach out to us. I did post my link, not my LinkedIn, my calendar link. So you're more than welcome to go and schedule a call with us. But we thank you for joining us this morning, and I hope that this was informative. We will be also posting this presentation on the NOSA community on YouTube as well. So you should be able to access that within the next few days. We'll be sure to post a message within the NOSA group so you know exactly when that goes up. But thank you so much to everyone. Josh, thank you so much. I'm always impressed by your knowledge base. Definitely fortunate to have you as my business partner. I know that I wouldn't be able to do anything with Plex without you. So thank you for all of this information, and thank you to all that have joined us. Thank you. Bye-bye.
Thanks. Bye, everyone.